Hello, my name is Greg Michaelowski. I'm with FXDD, and this is a Forex commentary specifically for FXStreet.com. We're going to focus on the euro versus US dollar, especially after the non-farm payroll. Of course, most people know that the non-farm payroll had a little bit of something for everybody. The unemployment rate did fall to 9.5%. That's good. The bad is that the private sector employment did not rise as much as expected. Only rose by 83,000 jobs, which is still okay, but not quite showing robust growth. They were expecting 110,000, and the prior month was also revised down to 33 from 41,000. Non-farm payrolls came in as expected. Manufacturing came in weaker than expected. The average weekly hours declined to 34.1. So all that suggests, more of the weak side. The only good news is the unemployment rate. And that was because of the decline in the labor force. In any case, the euro continued its move to the upside here. Dollar got a little bit weaker, and this prompted the currency pair to move through what we had as some support level here, or resistance level, I should say. This is a 38.2% retracement, the move down from the April of 2010 high to the low that we saw here in June. 38.2 comes in at 125.69. The market was able to push through that level and actually stay above that level for the time since the unemployment report. Now, in addition, although we are able to get above that level, we are finding some resistance off of at the 126 level. You can see here, though the market has moved above that level, moved actually to a high here of the 11. The market has not been able to sustain any sort of momentum above the 126 level. And what's the significance of 126 other than being a big number, or one of those key levels that market participants tend to slow down. I'm going to have to go back in time and take a look at this period right in this area here. The market originally came down, tested the 126 level, tested it here, fell through that level, used that level as resistance, moving forward into the month of May. This goes back to May. We had a high again come up to that level. We broke through that level. We squeezed it up to 71 and then came back down through that level, selling off sharply. The corrective move to the upside came up toward that 126 level, found the sellers against that level. So as you can see what the importance of that level from what I call a remembered prices in the past off of things like hourly charts that give you a clue as to where sellers or buyers may come in the market. And 126 level is definitely a level that the market is paying attention to. So from that perspective, where do we stand now? Well, I'm gonna go to the 5-minute chart now, and I'm going to put in a horizontal line at the 126 level. I'm also going to put in a line here at 125.69, and again that level corresponds to this 38.2% retracement of that off the daily chart. The daily chart again, 125.69 of the move down from April. So going back to the 5-minute chart, we have our line at there at 69. You can see how the market, when it corrected lower, where do we find support? 69. At 85, we're right in between the 126 level and the 69 level. This is the neutral area. This is the area where the market's going to find most comfort as it tries to decide, okay, which way does it want to break? Does it want to break to the upside, or does it want to break to the downside? And that's the where we are currently at the moment for the euro versus US dollar. So from a trading perspective, from a risk perspective, what traders will do is sell against the 126 level, probably stop themselves out if the market should break above the 11 level, and maybe even go long at the 126 level, look for further momentum to the upside. On the downside, you may find some buyers against this 69 level, or you may see some sellers if the market should break that 69 level. I do have a Fibonacci in here from today's low to today's high. 38.2 comes in at 62. A break of that 69 level is going to get further confirmation through that 62 level, and then we should head on down toward 47, and perhaps even head to this this 31 level where we had tops coming in right here, top coming in right here, and now we have the 61.8% retracement of the move up from the low today to the high here today. So that's how I see it. Right now, we're kind of sitting there waiting for the market to decide what it wants to do. But overall, the bias remains to the upside above the 69 level, and definitely that 38.2% retracement. But we are finding some profit taking after the sharp moves that we had here this week in the euro versus US dollar. This is Greg Michalowski with a look at the euro versus US dollar for FX Street.